That's another reason and proof why the market's hot right now. Banks are busy and short-staffed. They can't keep up with the demand.
Hello! Welcome to episode 83 of KT Confidential, the real estate podcast. We are your hosts. I am Ariel Kormendy, and he, whichever way you're looking, is Adrian Trott. Welcome to episode 83, Adrian.
What's up? How's everything going? Good morning. Actually, yeah, still good morning.
Still good morning.
It is good morning.
We usually do these podcasts in the morning. Things are going well. The weather is phenomenal. I'm in a hoodie because I'm in my basement. You're not in your hoodie today, but it's cold in our basements because the AC is going crazy.
Yes.
And man, it's busy in the last week. I think we've signed 10 or 12 contracts for purchases and sales. I'm working on an offer right now. I'm doing a whole bunch. The rest of the team is going crazy right now. You've got 5 or 6 listings you've signed on in the last week or so. So things
the market's hot. And that goes contrary to what we're going to talk about today.
Yeah, and today's topic is really simple. Last week, CMHC announced some changes to the insured mortgage approvals and potentially changing the way first-time home buyers will be able to afford homes. It also provided with an outlook in their announcement of I believe it was 8 to 12% decrease in house prices.
9 to 18. 9 to 18.
9 to 18. Okay, well.
Yeah.
So let's just talk about that announcement. So CMHC basically now has changed their guidelines as to what is required for your approval if you have an insured mortgage. That means less than 20% down. Your total debt service ratio or gross debt service ratio are both going to be decreased by about 2%. So if you earn $100,000, that's about a $2,000 swing in your approval, which will change the available mortgage by about quick math here. So $180 a month would equate to about a $40,000 mortgage. So for the average home price across Ontario, that would probably mean about a 10% lower purchasing power with this
Yes, I agree.
Let's just quickly talk about the other changes. So the other changes are at least one buyer has to have a credit score of at least 680.
680. What was it previously? I think it was low 600s.
Yes.
620 or 640 or something.
That was kind of wishy-washy. So who knows now how strict they're going to be with that, but it sounds
And then also the non-traditional sources of down payment will be treated as indebtedness. So previously it was treated as equity, and now it will not.
Yeah, you can't use a line of credit for a down payment anymore. So as an example, so you got to be careful where that money's coming from. It's got to be cash assets, liquid assets. If you're getting a gift from your parents, it might be another scenario.
It would be interesting to see the statistics on who actually is taking out mortgages under the CMHC program. I think obviously the bulk of them are going to be first-time home buyers who haven't been able to save up the 20% to make their first purchase. Obviously, they're going to be the ones that are most affected by this.
Yeah, I agree with that, but I also disagree to the point where it could be people buying in larger markets. So as an example, if you have a young professional couple and they're making $150,000 a year, good servicing, good credit, if you're buying a $800,000 or $900,000 condo in Toronto, which is not unheard of, you might not have 180 grand to put as a down payment. So
as first-time home buyers, I mean, most people that already own a home will have enough equity to hit that 20% threshold.
Well, I don't know. I don't know about that. And I don't know if, especially people living in Toronto, they're spending more money on eating out and maybe they're the ones that need to be downloading our money savings guide tips. But not necessarily, and people don't necessarily want to put all that money into a home. They still want to have money to travel. If they can afford the mortgage payments, maybe they want to put some money aside, right? Like when I purchased my home, I purchased it with 5% down because I could. And even though I had a more significant down payment, I needed that money in hand to accelerate our business. So I made a decision that I didn't want to pay down on the onset a seemingly cheap mortgage, because the mortgage rates now, you're talking, 2% mortgage is available. So why potentially do you put that extra money down? So
right.
So those are the changes, and the thought process is that it potentially will affect the first-time home buyers. So what's your thoughts on this? Is it going to affect the market? Is it going to affect first-time home buyers? How are we going to feel the effects?
This is not the first time that the banks or CMHC or various or the government have made new policies and implemented changes that make it more challenging to get approved, from the stress test to interest rate adjustments to whatever. This has happened many times in the past. And, as soon as it happens, everybody's forecasting, oh, this is going to have a negative impact on the market, but it really seldom does have a profound impact on anything. I think that's because the biggest variable comes down to supply and demand. And, as with any market. And I think right now, it may change how much somebody can afford, but it's not necessarily going to change the market as a whole. So I don't know. It'll be interesting to see. They're forecasting the 9 to 18% reduction in values. I don't suspect that will happen. I
don't agree with that at all. And the thing that people have to recognize that there are differences in different markets, right? Like a different market might have a low demand or a high inventory with a low demand, and those are potentially areas that could be affected. In Ontario, looking at Ontario and specifically the GTA and even Muskoka regions and Cottage Country, Parry Sound areas, they're booming, right? And there's not enough supply to keep up with the demand. There's still a lot of people that can afford homes that have had stability during the whole COVID experience, we'll call it, and that are out there, and that's why we're as busy as we are this month. Typically June.
I've scheduled showings for tomorrow already, and I've scheduled showings for tomorrow, and I'm already getting notifications that offers are coming in on these places, and this is happening on a regular basis. I did the same thing last week, Friday or Thursday last week, Saturday last week. I was out, and some of the houses we went out to see after I had scheduled, offers had come in. So people are out buying, and inventory is moving, and that just tells us that there's. I think the biggest gauge and the most accurate gauge I can make my kind of premise, my opinion on the market is based on the opinions and attitudes of our clients that we're actively working with. Earlier during the COVID pandemic, I was hearing from buyers a lot of, we're going to wait, we're going to see what happens. We want to put things on hold. That lasted for a few weeks. And then after that few weeks, we started getting phone calls, and people were saying, I want to move. I've been stuck in my house for too long. I want a pool. I want a bigger house. I can't afford my house. I want to get a smaller house, whatever the reason. But the outlook on the market from buyers had shifted. So there was no longer that uncertainty of, let's see what's going to happen. They saw what happened. They saw there was about a few percent change in value, and then it kind of flatlined and plateaued, and they started to see houses around them selling again, so they felt more comfortable going out. So as soon as their opinion changed, that tells me that people have a positive outlook on the market, which means things are going in a positive direction. And until we see that change again, I don't see reason to believe there's going to be a reduction again.
So if you are a first-time home buyer and CMHC now made these announcements, what do we do as realtors to coach them through that? Now, do you shift location and say, listen, you should still buy something to have that as an investment, and you need a place to live? Let's look a little bit further out from the area that you were looking at, or let's look at a smaller property, because there will be a lot of people that will be handcuffed, right? They won't have an additional down payment available to them.
Yeah.
And their debt servicing might be a little bit tighter because they've got maybe 2 vehicles or a young family, and things are expensive nowadays, man. Like groceries are expensive. Groceries and insurance and gas, and although gas is a bit cheaper now, but
gas is cheaper now. Yeah.
Our money savings tip guide will only save you so much money. You still need the proper financial resources to be able to purchase a home. And so, I mean, like you said, I think it'll be interesting to see what happens with that first-time home buyer market. But I do want to throw this out there, and I know you're an advocate of this, and I think it's going to become more relevant and more prevalent in the market with these changes. If you live in an area or want to live in an area where you can't afford a home and you're forced to rent, so as an example, if you are living in Mississauga home prices are very expensive now. To purchase a townhome, anything decent, you're going to start at kind of $600,000 if you're lucky. Or it's cheaper but has a shit ton of maintenance fees attached to it, or is an old piece of crap that needs $100,000 in renovation. So let's just say $600,000. You probably don't have a $120,000 down payment unless you were super diligent on saving, which most people aren't. So I think what people should look at is buying outside of where they're living. So rent where you want to live. So maybe you could live in Port Credit for $2,000 a month or $2,500 a month, whatever, and you get to live in the area you live in or want to live in. But then maybe you're buying an investment property in Guelph where there is a tenant that is covering a good percentage, if not all, of your outlay in costs on a month-to-month basis.
Yeah.
And your mortgage is getting paid down in principal every month by about 45 or to 50% of your mortgage payment. And you've got about a 6 to 8% increase on the purchase or on the selling price as a return on that investment on average every year. So I think if you can't afford to buy where you want to live, go ahead, rent something, but still focus on buying something that you can actually carry and afford.
Yes, I agree. Well, I mean, real estate is just, it's a form of investment, and owning the house you live in is not, people have the preconceived notion that they need to own a house. And it's good to own a house because it's good to have your foot in the market, because historically the real estate market will increase over time and you're going to make money on it. But it doesn't mean you have to own the house you live in. It just means own a house to have your foot in the market. That could be an hour outside of where you live because the affordability is more feasible there. And then you rent closer to work or closer to family, or, within the general geographical area that you travel and commute, so that you don't have as far to go. Or you make the sacrifice, if you are dead set on owning the house you live in, then you make the sacrifice of buying further away. I just helped a couple that currently live in Oakville, and they work in Mississauga, and they want to own a house and live in that house. So they bought a house in Cambridge because that's what they can afford. And they're willing to sacrifice their commute time.
And they got a great deal on the place.
Yeah, exactly.
So they're going to return very well on their investment. For those of you listening, if you're watching on YouTube, please subscribe. Lots of great podcasts coming down the pipe. And if you're listening on a podcast somewhere, whatever the app or website is that you're listening to us,
SoundCloud, Spotify, Google, Apple, whatever.
We're everywhere. So make sure you follow so you get notifications of these. Today is going to be a quick podcast. I think we covered some really good information, and there is a positive outlook in the market. We are continuing to get many inquiries. I don't think this is going to have much of a setback in the GTA market. So we'll continue to monitor it and give you updates as to what's happening. If you do have any comments or questions, please feel free to DM us or leave a comment. We love hearing your feedback. And hey, a lot of people have questions about real estate, and that's what we're here to do, is answer those questions. So
just one thing. It sounds like you're trying to wrap up, which I know you're short on time.
Gotta get going. Lots of offers on the go today.
Just before we wrap up, one thing I recommend buyers that are actively looking to purchase do is, and I'm hearing this a lot from mortgage brokers that I work closely with, is with the changes with CMHC, that is reason to get reapproved, and make sure you touch base with your mortgage broker to see if that affects you at all. But also changes with everything going on with COVID. A lot of people I know someone that just recently had to take a 20% pay cut, and their hours were cut down at work. Even though those changes may be temporary, banks and financial institutions are taking those reductions into consideration with your approval. So if you were approved a month ago at 100% of your salary, and now you've taken a reduction, that could affect your approval. So make sure you touch base with your mortgage broker.
I'm glad you brought this up, because I just finished a deal where we had a 5-day condition on financing. I had to get it extended for 2 days, which I didn't even think was going to happen, because we purchased the home within 24 hours of it going on the market, and a very desirable home in a very desirable location. We got that extra 2-day extension. The reason
that's because you're good at what you do.
The reason we needed it is because the bank is short-staffed. They've been inundated with a high amount of mortgage requests for approvals and deals that are coming across their table. And their underwriter is not able to keep up. So while they had an approval in place, they did have a couple of conditions to fulfill that approval, and it couldn't get looked at until past the expiry of the conditional period. And if you are buying a home without that condition on a mortgage, you better be damn sure that you are going to be approved. So be very, very cautious. I'm glad you brought that up. Thanks for listening.
That's another reason why
I gotta go.
That's another reason and proof why the market's hot right now. Banks are busy and short-staffed. They can't keep up with the demand. Things aren't changing. If you want to
keep talking, go on to Instagram stories and listen to my friend Adrian here, who's got lots of time on his hands, apparently. I got to go. Peace.
Yeah, have
Episode 83, KT Confidential. Thanks for watching or listening.